Hey guys, it's Nick, and today Netflix came out with earnings after the close, and their stock dropped 26% and also took down other streaming companies like Disney, Roku, Paramount, and Warner Brothers Discovery. And it wasn't even the earnings that were that bad, it was the subscriber growth that spooked everyone. So, is this just a one time blip because of the effects of the Russia Ukraine war, or is there more to it? Also, is now a good time to buy Netflix because all the bad news is out and they have two possible tricks up their sleeve to turn things around? Let's have a look. So, here are the main numbers from this quarter's earnings. Revenue 7.87 billion. It missed the expected 7.95 billion, but not by much. Their earnings per share actually beat the estimate. They made 353. The estimate was only 291. So good news, right? Yes, but their streaming paid membership was 221 million, which missed the estimated 224.5 million. And the thing that spooked everybody is their first quarter streaming paid net change was minus 200,000 subscribers. So that's a huge miss to the expected increase of 2.5 million subscribers. And why is this a big deal? Because this is the first time that their subscribers actually dropped quarter over quarter since 2011. So let's see where most of the subscriber losses were. So comparing the subs in this quarter versus the same quarter a year ago, they lost 640 versus gaining 450,000 a year ago. And their estimate was supposed to be for an increase of 87,000. So that's a miss of about 730,000 subscribers right there. In Europe, Middle East, Africa, they lost 300,000 versus an increase of 1.81 million a year ago and an estimate of 950,000 for this quarter. So that's a miss of about 1.25 million right there. Latin America, they lost 350,000 versus a 360,000 increase a year ago, and they were expecting an increase of 330,000, so about a 680,000 subscriber difference from what was expected. In Asia Pacific, they increased by 1.09 million, which is still a 20% decrease over a year ago, but they were very close to their estimate of about 1.2 million increased subs. So is the loss in subscribers due to the war in Russia? Not really, but a little bit. So Netflix suspended 700,000 subscribers in Russia. So if they hadn't done that, they would have added 500,000 new subscribers in the quarter instead of losing 200,000. But that is still a far cry from the forecast of 2.5 million net subscribers that they were expecting for the quarter. So what do they have up their sleeve to try to increase the growth even among all this new competition that they have in the US and other places? Well, one of them is the hopes to crack down on sharing, and they claim that 100 million households are using another household's account. In other words, Netflix hopes to tap into the untapped thieves market. So they want to turn these thieves into paying customers. So how are they going to turn some of these 100 million or so people into paying customers when they don't want to pay now? That's kind of their other trick. And that is finally adding ads to Netflix. Now, before you say everybody's going to abandon them and not take them up on that deal, and Reed Hastings has always been against putting ads on Netflix, just think back to cable TV when it started. People were saying, why would I pay for TV when I get free TV over the air? And cable TV companies said, oh, you're paying because we're not showing you ads. So you're paying for the luxury of not having to see any ads on your TV. Let's see how that worked out. So in July 1981, the New York Times said, will cable TV be invaded by commercials? Well, we all know the answer to that, right? So not only did cable TV start adding commercials, but now They are cramming even more commercials to make up for cord cutting. They say cable channels average 12 seconds more ads per hour than they did a year ago. This is in 2019. So just like no cable TV ads in 1980, let's see what Reed Hastings said on why Netflix won't ever sell ads. This is January 2020, just 2 years ago. Seriously, folks, Netflix has no intention of monetizing with ads ever. Here's what Reed Hastings said about it. We want to be the safe respite where you can explore, get stimulated, have fun, and enjoy, and have none of the controversy around exploiting users with advertising. So 2 years ago, he thought ads were exploiting users. Let's see what he thought more recently. June 2021, Netflix should sell ads, one analyst says. Why that's not likely to happen. Netflix CEO Reed Hastings has been clear that the company has no intention of ever selling advertising. And they say here there is little reason to think Netflix is going to change its position on selling ads. We went public 20 years ago at about $1 a share, and now we're more than 500, Hastings said in an interview last year. So I would say our subscription-focused strategies worked pretty well. Okay, fast forward not even a year later. Let's see what he says now. Netflix will add advertising in the next year or two, says co-CEO Reed Hastings finally concedes consumer choice prompting cheaper plan. So he went from considering ads to be exploiting users to now giving consumers choice. Those who have followed Netflix know that I've been against the complexity of advertising and a big fan of the simplicity of subscription. But as much as I'm a fan of that, I'm a bigger fan of consumer choice. Allowing consumers who would like to have a lower price and are advertising tolerant get what they want makes a lot of sense. So that's something we're looking at now. We're trying to figure out over the next year or two. Think of us as quite open to offering even lower prices with advertising as a consumer choice. So Netflix seems to me like Uber, where they undercut the competition and subsidize customers until they and Lyft were the major players left and they got all the market share that they could expect. Then they start raising prices. In Netflix's case, there is a lot more competition. But if they think they have as much market share as they will get, at least in the US and Canada and other mature markets, now they can start doing things like adding advertising and going after the estimated 100 million users that share someone else's account. And so maybe they will combine the two by cracking down on password sharing and at the same time offering a reduced price membership with ads. So even if that moderately works, it can add a lot of new paying customers who already know that they like Netflix and want to stay. They just have to be convinced to shell out a few bucks a month. Now, I'm not saying you should buy this stock, but it definitely is a lot more interesting around $250 a share than it was a few months ago at $700 a share. I hope you liked this video, and I'll see you in the next one. Thanks for watching, guys.